Most traders don't lose because their strategy is bad. They lose because they can't follow it. I used to move my stop loss when price got close. I'd enter early because I felt the move coming, and after a loss, I'd try and make it back immediately. That's not a strategy problem, that is an emotional control problem. Before you skip this video, understand something. If you're struggling with emotional trades, this might be the most important 5 minutes you will watch this week, because most traders don't fail from lack of strategy, they fail because they can't control themselves. And I know that because I've been there. I've moved stop losses because I didn't want to accept being wrong. I've taken revenge trades after a loss. I've entered early because I felt the market was about to move, and every single time it cost me. Emotional trading doesn't look dramatic at first. It looks small. It's one rule break, one impulsive entry, one tiny increase in lot size. But those small moments compound, just like profits do, and eventually they destroy consistency. Here are 4 main emotional traps traders fall into. 1. Revenge trading. You take a loss. Instead of resetting, you immediately look for another setup. Not because it's valid, but because you want to make your money back. At that moment, the market becomes personal, and trading can never be personal. Moving stop loss. Price gets close to your stop. Instead of accepting the loss, you widen it and tell yourself the market needs room, which is false in my case. But what you really need is emotional control. Overconfidence after wins. You win 2 to 3 trades in a row. Now you feel sharp. You increase risk slightly. You see setups everywhere. That is not skill. That's ego taking over. Impulsive entries. You jump into trades before confirmation because waiting feels uncomfortable and impatience feels urgent, but urgency is rarely profitable. So, how do you detach? Not trying to feel nothing. You detach by creating structure that protects you from yourself. The system. Here is the exact system I use. Before every trade, I run a checklist. Is this setup clearly in my trading plan? Is this risk fixed at my standard percentage? Is the risk to reward ratio acceptable? Would I take this trade if I had just taken a loss? If one of the answer is no, I don't trade. Second rule, fixed risk. Same percentage every trade, no increasing after losses, no increasing after wins. Consistency reduces emotional swings. Third rule, judge execution, not outcome. After a trade closes, I don't ask, did I win? I ask, did I follow my rules? If I followed my system and lost, that's still success, and I journal it down. If I broke rules and won, that's failure, and that's on me, not my system, not nothing. That was all on me, because long-term discipline compounds and emotion doesn't. The real shift happens when you stop trying to make money and start trying to execute perfectly. Professionals think in series of 100 trades. Amateurs think in the next trade. One trade doesn't matter, but one broken rule repeated 50 times does. If you want to detach from emotional trading, stop chasing better indicators. Build better discipline. Structure creates freedom, and discipline builds confidence. I'm not perfect at this, but I've learned that discipline is a skill. And like any skill, it improves with repetition. Detach from the outcome, commit to execution, and let consistency do the rest. If this helped you, comment the emotional mistake you struggle with most, and in the next video, I'll break down how I structure my trading week to stay disciplined. Make sure you like, share, comment, and subscribe to the video, and I'll see you in the next one.